Good morning, my Colorado friends. Randy Flood here. Today is Thursday, July the 15th, and we have a lot of great news today, which is really great for rates. The only thing that for the rates go up category that we have is new jobless claims. Only 29,000 people lost their jobs. So that's really very minor considering what it has been. Now the rates go down category, the PPI, which measures inflation. That number is down 0.5%. And when you take out food and energy, that is only went up 0.1%. So basically, we have no inflation, which is terrific. Continuing claims rose significantly. Once again, that's for unemployment. And industrial production, the New York Empire State, and also the Philly Fed Index. All these things here is talking about manufacturing and production. And as I said before, in order to get us out of the poor economic state that we're in right now, we need to have housing, and housing isn't taking us out of it. Next thing we have to have is manufacturing, and manufacturing is not doing it either. So all these numbers were really down, which also caused the Dow to be down today. And yesterday, the Fed's comments were not very rosy. So, that's part of the reason we had the big rally yesterday, along with the great 30-year auction yesterday, too. Because what happened is, as I mentioned in yesterday's update, a lot of people expected not a great demand for the 30-year auction, but it exceeded expectations, and once again, that drove up the bond market. Here's what's going on in the market right now. As you can see, we're actually up by 37 basis points. And when I slide over here, once again, you'll see that we had that rally yesterday. Once again, that is because of the Fed's less than rosy comments and also the great 30-year auction. Now, take a look at what's happening. And this is fantastic because when you take in consideration the bond rollover, and that's the reason, these candlesticks are lower, if you adjusted it to 34 basis points, right now, we would be up here as far as the actual position. And, we're above the 10-day moving average, which is critical, even with the bond rollover. And once again, this is really great news. Now, I don't talk about it very much, although it's very important, and that is the Treasury. Wait one second as I bring it up. Let me go here. Treasury yields have been going down, and the last 2 days were actually coming up, and that's good because we needed to recover. And right now we're looking like at a 3% on the Treasury. And that is also very important. Now, this is what's happening today. As you can see, we've already had two alerts, talking about floating. And as you can see, it's a great rally. Now, what are the lenders doing? As you can see, the lenders today, most of them have improved their pricing by almost of 0.25%, which is great. And the thing I like about RateWatch Report is, see, I can click here, and 43 have actually improved their pricing from the first alert. And that allows me to keep track of on what is actually going on. And right now we're seeing on the interest rates sheets that we're getting 4.25% rates. Now, it's still not really strong enough where you're going to see the borrowers to actually get it, but the way this rally is going, pretty soon, I think you'll be seeing a lot of people getting 4.25%. In summary, as I mentioned, we have a lot of great reasons for this rally, and it's a strong rally, and not only with support and volume, but it's a great rally. Manufacturing sector is sputtering. We're not producing. We're not creating products which we need. New jobless claims were down. A great 30-year auction yesterday. Once again, it exceeded all expectations. Inflation is at 0%, which is great because with high inflation, that decreases the bond yields, which causes rates to go up. The Fed, they're not that rosy. They're very timid about the outlook for the economy. And as I kind of mentioned, if we were at the 4.5 coupon, because like right now we're at the 4% coupon, we'd be trading at all new time highs, which is a 104.2. So once again, I mean, we're reaching new levels. And again, the economy is weak, and there's a lot of room for the bonds to run, which means rates go down. Now, the thought of the day: our job is to listen, ask questions, and only then make recommendations. And I think this is very crucial. I was in healthcare for over 20 years, and if someone came to me and says, fix me, heal me, and if I prescribe something without asking any questions or doing any diagnostic testing, I'd be considered a quack. And it's very crucial for us to listen, ask questions, find out exactly what their current status is, and then find out what their need is, and then go on and make the recommendations, and provide the solution for them. And again, only wanting the best for you.